The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Tell Us Why, a podcast for the financial freedom community. If you're looking to succeed in your quest for financial freedom, make sure you join us every week as we, along with our guests, discuss different stories of success, how they were achieved, and how you can do the same. And of course, we ask them to tell us why. Here are your hosts, Jack and Mike.
Welcome to the Tell Us Why podcast. I'm your host, Jack Dalrymple, here alongside my co-host, Mr. Michael Ketchen. Today we were talking with Axel Ragnarsson. Axel is an entrepreneur and host of the Multifamily Wealth podcast and is a
great podcast, yeah.
Owner and founder of Brickleaf Properties. Yeah. At your meetups, I've heard about the podcast quite a bit. And have,
great. One of the best out there, honestly.
Yeah.
Yeah. What's going on?
Valuable info.
Oh, yeah, tons.
You know, like as we discussed last week, taking over the property management, going there once a week and getting after that. Also working on the refis that I mentioned a couple weeks ago. So really hammering that out. Feel like an admin, but doing a lot of work.
It's important stuff, though. Who's got to get it done?
Someone here should be doing it, but you won't leave her jobs.
Live studio audience, shout out.
Yeah, no big deal.
Shout out to the other half of 1124 Properties. So, yeah, that's awesome.
Yeah, but going back to Brickleaf, headquartered in Manchester, New Hampshire, there's a real estate investment firm specializing in the acquisition and management of value-add multifamily properties throughout New Hampshire, Massachusetts, and southeastern markets too. New Hampshire, Tennessee.
Oh, this guy's been busy.
And Arkansas.
Can't keep up with him. His Instagram makes me jealous. I'm thinking, geez, I just want to hang out with him a little bit,
Arkansas. What's going on in your business? What do you got?
That's been great. We sold a property while I was abroad, which was kind of cool. It was different.
Oh,
power of technology. Work? And that kind of got me thinking, man, we take for granted when it comes to systems and building a business right now, doing things remotely and the power you can unlock. And it got me kind of thinking even how we can scale and incorporate some more. But it was a pretty cool process. And like I said, yeah, we're definitely going to talk to the guest we got on today. We'll get into the why. We'll get into some of the systems and scaling. Before we bring on this great guest, though, should we hear who this week's episode is brought to you by?
Let's do it.
Let's get
Are you sick of being treated like just another number by large insurance companies? Do you want a more personalized experience with somebody that you can trust? With Keith Monteith, that's exactly what you'll get. Keith is an experienced professional who can design an insurance plan tailored to fit your specific needs. With access to over 30 insurance carriers, Keith is able to shop numerous markets to find a price that works for you. So if you want an insurance agent that you can rely on and one that has your best interests at heart, then call or text Keith today on 978-241-2363. That's 978-241-2363. Keith Monty. He'll get you covered.
All right. Axel is a New Hampshire native and has been a full-time real estate nerd. Wow.
Right,
wow.
It took 10 seconds
Here
in.
we
Every
go.
episode, here we go.
You're
making me feel comfortable.
Full-time real estate investor
Jack,
in the New Hampshire area for 5+ years.
There we go.
Go ahead. Say it. I can't read.
We have too much fun.
You can read, you just can't talk.
He purchased his first multifamily property during his sophomore year at the University of New Hampshire. I want to touch on that. And shortly after caught the real estate bug, leading to the founding of his real estate investment firm, Brickleaf Properties. Currently, they own approximately $12 million in multifamily real estate and has been a principal party in $20 million plus worth of transactions.
There you go. Good job. Got through it.
So in addition to that, he's the host of the Multifamily Wealth podcast, where he interviews successful real estate investors. So, Axel, thank you. Appreciate it. Thanks for being here.
Absolutely. It's funny hearing your LinkedIn bio read to you. Feels pretty wordy.
Yeah, well.
We have to tighten that up.
I'll go through that, and I have two quick stories before we get into it that I'm going to blindside Axel with as we kick it off here.
Oh, yeah, geez.
The first, I'm really going to push the podcast. I think he thinks I'm lying to him at this point because I genuinely enjoy it that much. It is so hard to get quality content that grows with you. Mm-hmm. And what I mean by that is I go back and look at the stuff I saw in this investing space 2 years ago, 3 years ago versus stuff I need now. Your podcast and the way your guests make everything relatable from high-level concepts to introductory stuff, it is a must listen. And if you're getting into investing and you're interested in real estate in particular, I don't pump a lot of them like this, which is why I'm being
I
genuine.
appreciate it.
Go check it out.
Unbelievable.
I told him at the meetup a couple times.
All
I
right,
think
so
Axel
that's
thought
it
Mike
for
was
today.
there. So,
I was
no,
gonna say.
go check it out. And the other side of it is we had coffee, I think the first time we met, and full disclosure, you didn't tell me you were a giant before we met because I would have walked in. Things real life Thor over here. We meet in Manchester, and it was really cool to connect because I kind of heard about you. I think you heard a little bit about our business, and we were both kind of growing. And just to see someone taking action and grow the way you grow, to be an observer of that, it's been really cool, man.
No, I appreciate that.
I love seeing you get after it.
Do you remember the kind of the nexus of how we got each other's contact info? Because I think I remember it. I think it was I might have cold emailed you or Matt about
trying to buy a
about
building?
a deal in Pine Street or about a property you guys own. And Matt was like, "Hey, we know what we're doing," and I was like, "All right, probably can't do much here," but that was funny.
one.
It
Yeah,
might
it
have been
was
you.
great.
I can't. It was either you or Matt.
I think I usually reply back 5 million. I don't even know what it is. And just,
And I was like, you were part of the majority of the percentage where we're not getting a deal done, but that's totally fine.
Yeah, we had a great
funny.
conversation.
Yeah, it's funny how that stuff works.
Yeah, growth. So let's get into it. Where is Brickleaf? Where are you at today as an investor? Where's your business at?
Yeah, so it's really interesting right now because we're actually, somewhat rebranding the business from Brickleaf, which is a name that I came up with back in college when I did a first deal, and it's kind of a name you throw together to put in a business card. But getting a little bit more intentional right now and actually rebranding the business to go out there and speak to passive investors and folks that want to invest passively in real estate. So a lot of the busy professional types. People that are in sales, business owners, even like real estate brokers, real estate house flippers, stuff like that. And I say all that to get to we're looking to raise capital, work with more partners. I personally live in Boston. I'm from New Hampshire. I got started in New Hampshire, so we own a good chunk of property up here, and we got a property management company, but expanding outside of New England. So and that's really just 2021 we've done that. So a couple of deals down in Florida, deal out in Texas, doing some deals kind of spread throughout the Southeast, and we're looking at some in the Midwest now. But it's really all a function of having great partners to work with, both operationally and then on the investor side. So that's kind of where I'm at now, is trying to scale the business somewhat and, do bigger deals, do more deals, work with more people. And I think that's kind of the biggest development in the last year. But as of today, that's kind of the next path forward, or next step forward, I should say.
That's awesome. Great answer.
I like it. So, like I said, we started at the beginning. Begin at the beginning. But let's talk about that first investment. I was born a baby. No. Let's talk about that first investment that you
7 minutes in, off the rails.
made during college, UNH. How's that come about?
Yeah, so the quick and dirty backstory, if I don't go all the way back to the beginning, but somewhat back. We'll go a couple years before that. So back in high school and early college, I was buying and selling stuff. That was kind of how I made money. Golf clubs, Xboxes, cars, and just, was just trying to make a buck. And basically got to the point where I was like, what can I buy and sell that's a little bit bigger than, electronics and cars? And, stumbled upon Bigger Pockets, started watching HGTV. Started learning about flipping houses, and kind of got to a point to where I was like, yeah, maybe I should try and learn this, put some time into this. So as I was learning about flipping houses, I learned about rental real estate and passive income, and it seemed like that was a much better deal. You do the work once and get paid kind of forever. Yeah. So I was like, yeah, let's try and figure out how to buy a place. So I had an internship at the time where I was kind of working as an admin for like a little investment group in Manchester. 10X Venture Partners is the name of them. They're still doing deals, investing in startups. But just 10 wealthy guys getting together every month, and I was sitting in the corner just taking notes. So got to be around guys who were kind of crushing it. One of the gentlemen who was in that group did a lot of private money lending. So basically cornered him one day and said, hey, if I find a good real estate deal, will you loan me the purchase price or something like that? And basically over a year from that conversation to doing a deal, I was out there learning the business and listening to the podcast. I think doing what everybody else does to kind of learn the business. And long story short, I found a deal on Craigslist, a 3-unit multifamily in Chester, New Hampshire, which I think is one of 3 multifamily properties in the whole town. I just grew up in Chester. That's it's my hometown, so knew it like the back of my hand. And good price, made sense, didn't require a lot of renovation, so it wasn't like a big risk for me to get involved in something like that. And basically took every dime I had and put it down on that one. And then managed that myself, and ended up selling that one a year later. And along the way I picked up a duplex, but started getting my feet wet. So
Kind of tying into it, yeah.
Yeah, did 2 or 3 deals, while I was at UNH there. So when I graduated, I had, I think it was like 8 or 9 units, and I was like, I think that I could kind of make a run at this in terms of building a business here and being a little bit more intentional about it. So, but that's, before I get ahead of myself, I guess that's how I got into it. Was I was trying to flip houses, but I was like, passive income is much more compelling than just trying to, just work really hard to find like a flip. I mean, it's harder to find a flip than a cash flowing multifamily project, and the lending was harder is what I found too. So it kind of steered me in that direction.
So that was what I was going to ask. What year was, not to date you, but what was this, right a little after 08, 09?
This is 2016. So
it's still not really exploded. Yeah. We're kind of more in the bull run, but I remember, I think it was 15, 16, we started to get the same itch, and a lot of people are already saying, it's about to crash. It still really hadn't exploded.
Yeah. And that's what I was really nervous about at the time was, and Bigger Pockets is an amazing website. It's perfect for getting started and learning everything you can about the business and how to get going. But there can be a lot of noise on there if you spend a lot of time on there, and it can,
paralysis by analysis,
tons of conflicting opinions, and just the nature of who's on there. It's a lot of folks that really haven't done too much, so you're not getting like a lot of great actionable advice oftentimes in terms of like what should I be doing. So I was kind of like, am I gonna, what I put down was $15,000. It was all the money I had from doing everything I did on the side. And I was like, am I going to, is this kind of the worst time for me to do this?
This is the way we're all going to end. The
I was like, the downside for me was like.
Is it all over?
Yeah, and the downside for me was like, the property loses value. I do a bad deal. I mean, there was a lot of things that was kind of preventing me from doing it. But at some point I was like, if I go to zero here, like I'm 21, I could just, run it back. So.
And that's where I want to touch on something very important that, again, we always try to point out the similar themes. And my big takeaway in that story that you just shared that I had no idea about, and I think it really kind of speaks to your character and even your approach that's now making sense as we meet. What was it like being a college student and understanding, because it's very hard to do, I'm going to be a fly on the wall around all these successful people, and I'm not going to interject. I'm going to listen and observe. Mm-hmm. What was that process like? Had you always kind of been seeking mentors? Or how did you stumble into that at that age?
No, that's a good question. And, I think we're probably going to touch on it at some point about, the value of college, right? And I think for me, the value in being at school was not in the classes. I didn't get anything out of going to class. Like I was a student that skipped and didn't really pay attention. But so I was not the ideal student there, but I did get involved in a lot of organizations and groups. And that was really just to meet people and kind of be around people that were kind of doing what I wanted to be doing. So I was part of basically, it's called the Ryan's Angel Fund. It was the first angel investment group that was run by undergraduate students, and I just lucked out and was right place, right time. I was part of the founding of that. That's awesome. So I got involved with the 10X Venture Group just as an unpaid intern, as basically they were an affiliate to our group at the school. And yeah, I mean, my responsibilities were taking notes and scheduling meetings, but I was going like above and beyond in every single way. I was working, twice what I was supposed to be doing there. I'd go and, grab coffee and breakfast for the meetings on the Tuesday mornings, not asked to get reimbursed. I mean, I was just trying to do stuff to become, I guess, invaluable to them. Yeah. And it's funny because after I left, the gentleman that runs it, he went out there and actually hired somebody like full time to do what I was doing because he's like, we're screwed now. I can't go back to scheduling all this. So
I need a paid position.
Yeah. So he goes, you made a problem for me in a way, which I thought was funny. But I mean, so for me, I was like, this is great. I mean, all these guys are crushing it. And at the time I thought maybe I'll go get like a job with one of these guys' companies or something like that. Yep. But it just so happened to coincide with, how do I get into real estate? And it was somebody's got to lend me money. And I was like, I'm around guys with money, so let me just bring it up to them at some point. And, at the time it's like a huge, you feel like it's a huge ask to get somebody to lend you a couple $100,000, but for them it's like, if you're finding a discounted deal and I get a first position mortgage,
get a good return.
And I can help you out and we can build a relationship. It was like the biggest no-brainer decision for the guy I worked with and those guys in terms of getting involved with someone at that level. But for me, it was like a huge thing, obviously. So,
yep.
You look back and realize that now, but in the moment, it doesn't feel like that. So I think at the time it was just, I want to be around these people that are crushing it, bring value, and make it. If I get to work with them in some capacity, I want it to be a no-brainer for them to make it easy for me to work with them.
Oh, then really again, it goes back to that reputation, right?
Yeah.
And think about how many skills you're leveraging in college, which now this makes sense that they're showing up in his day-to-day business. We talk about this, right, Jack?
Yeah.
The networking, the systems,
all the time.
The entrepreneurial spirit, right?
Going back to what Jim Rohn quote of the week is, you are the average of the 5 people you spend the most time with, and I think that applies here.
In that specific situation, it was great. I mean, it's funny who you think about who you hang out with. Like for my friend group it's not like we're all out there crushing real estate deals. I'm hanging out with regular dudes, but I think that you have to balance that, whether it's like listening to people that are who you want to be and just kind of by association doing that, or joining some groups, or really consistently going to networking groups and having people pull you up. So I mean, you can find a balance there, and it doesn't mean you have to go and ditch whoever you're chilling with. It's you can go out there and find some other people to at least offset
Absolutely.
those dynamics.
That leads into kind of one thing we've never talked about. We've talked business, and what I was excited to have you on, and I told Jack, what is the point of all this? You're running around, you're flying. So what is the why? Why are you taking all this risk and betting on yourself? And you leave UNH, you got the degree, you got this great network, you could go get the traditional thing. And as a relatively young guy, what I was really impressed when we met is you had your business figured out, but we want to know, to put that effort and take that risk, what was it? What is the why?
I mean, it's a great question, right? And I think for me, because I obviously think about that a lot, right? It's really kind of the fulfillment of the potential piece of it, right? Because I'm not married, I don't have a family, right? So I think a lot of people get into real estate or start a business because they want to quit their job, or they want to send their kids to college, or whatever it may be, and those are much more powerful reasons, I think, than maybe what I got going on. But for me, it was like I think in your 20s specifically, for people listening who are in their 20s, like you have 10 years to set up the next 70 years of your life, or your 30s too. I mean, it's but the earlier you get started in all this stuff,
head start,
the more it compounds like really significantly. Once you get to be 40, 50, 60 years old. So for me, I was like, I have an interest with this. I like to hustle. I'm entrepreneurial. I've always known I'm going to run a business. I mean, that was always something I inherently knew. I never really had a job. Like I was always making money doing other stuff. Mm-hmm. So at the time I was trying to figure out, well, what business can I start or run? I didn't have an original idea or something that I, thought of to go start. So I was like, real estate's a pretty proven business. That's an outlet for what I want to do. Why not just build something around that? So for me, it was less real estate investing and more building a real estate business. So I was pretty conscious of that early on. Like, I want to, have a company. I want to actually treat this, professionally, not just kind of do it on the side and, half-ass it, for lack of a better way. I want to really build this out correctly. So I had that thought early on, and it was like, this is going to be the business that I start and that I run and that I build and scale. And it's nice that it provides passive income, and it's nice that it just so happens to be a great way to, give yourself some freedom.
Yep.
But to bring it back to your question specifically, I guess is, it was all about fulfilling the potential for me. I was like, if I was out there, because I knew I could do it, like inherently, like, and I think
you want to prove it to yourself.
The internship thing, where I'm like, this guy trusted me enough to loan me some money here, and I feel like I belong in this room, and I get good feedback from these guys that are really successful. And I remember, reading a quote somewhere too, where it was like, I don't remember, it was Instagram or something like that, but it was like, you should be much more scared by. Basically, people are worried about the risk of taking these financial risks and doing all of these things and investing the time and the money and the energy into doing this stuff. But really, the fear should be, what happens if you don't do that? Like, what happens if you just decide to not do that?
Go back and listen to that right there.
So for me, that's what I'm always thinking about is like, all right, if I don't do that, like, even if the market changes in real estate and I lose a bunch of money or whatever, okay, so if I had a job, I'd probably lose the job if the economy is that bad. So I'd be at the same spot anyways.
Yeah.
It's like,
do you guys find, honestly, to jump in, and I know this is important to you, we talk about this, do you find this in your own day-to-day, the things that we just had to have a tough conversation in the business, to be selfish with the time here again, and we had to make a transition I didn't think we'd have to make around the way we were building the teams. We just had to adjust some things. Yeah. And I had built this conversation and this weight up so much on me for months carrying this, that when I finally let it go, and I did it yesterday, I feel so refreshed and invigorated, and the conversation couldn't have gone better. We're just moving things around. We're reinvesting in this person, shuffling some things around. But I had built it up in my head so much that the fear.
Yeah.
And meanwhile, we'll go raise millions of dollars. We'll do these deals. So do you feel like the fear sometimes can be overwhelming, Jack? Did you see that in your own business as well?
Well, yeah, I mean, 1,000%. And just kind of going back to what you were alluding to, like one of my biggest fears in life is getting to, going to ask the 90-year-old question at the end of this for the big three. Like, what if I'm 90 years old and I regret not taking that risk?
Yeah,
like,
exactly.
That's a huge fear for me.
Yep.
Like, if I spend my life working for 60 years at some job that I hate, that's 10 times worse than failing at something that I thoroughly enjoy and love doing. I would rather take that risk and fail than not take that risk and live 60 years of suck.
That's
for
such
me.
a great way to put it.
Like,
Yeah.
That
Well, and I think it's like there's the whole concept, like everybody's got problems, like how, you're going to have problems no matter what you're doing.
Yep. And it is. It's true. Whether it's at a job, it's what are the problems we're working on,
Yeah.
right?
Do you want to have big problems or little problems? They're the same emotional gravity oftentimes because you haven't in the moment.
So spot on.
So it's like, you can be really stressed about getting to work by 8:30 in the morning or whatever it is, or you can be stressed about something bigger, but you're going to be stressed about something. Might as well be stressed about something that's big.
Speaking of stress and things that stress us out, and again, being selfish with the episode, your social media, your branding, these things you're doing, it's very impressive. I think you do a very good job with it. So selfishly with what we're doing here, so we're growing. What has it been like launching? We've talked the real estate. We've got the why. I think I have, tying it back to give you some more kudos, you're very intentional with what you've done with the podcast where you've leveraged your social media network, at least I think as an outsider, into we've met, hey, Mike, I'm going to go across the country. I'm going to get in some of these other deals. I'm thinking about these opportunities. 2 months later, I'll see it on the story. And I'm going, man, I've never seen somebody come out and be as, hey, I think Indiana was a market you're starting to look in.
Yeah.
I'm looking at Florida. I'm looking at this. Well, now I've got this guy on who's talking about taxes and investing down here, which that led to our cost seg, which where we did it. And I've got these guys on who are investing in Florida. Now you're investing in Florida. How are you tying those two worlds together? How are you building that brand, and how are you being intentional with that and tying it into your why and not being overwhelmed with all these businesses?
Yeah, I mean, not being overwhelmed is a big piece of it, right? I mean, that's because I do get pretty overwhelmed with all this stuff, right? And I think everybody has a hard time hiring. That's the nature of growing a business. Is everyone has a hard time letting go. So for me, it took me a while, but something that I have completely given up control of is the editing, the social media production of the podcast specific content. I still own all of my content production on Instagram, and I don't really post that much. I post a few times a week, but like it's really the podcast. And you alluded to this earlier, and I appreciate all the kudos too on a whole side note. But you're like, it feels
it's
like
genuine,
Yeah, no, we're kind of running parallel in some respects.
Yep.
So for me, I'm so selfish with the podcast in that I just bring people on that can help me.
That I want to learn from.
So I'm like, and then I'm asking them questions that I specifically need to know. Yeah. That's one of those things.
That's why you're here. So.
Well, it's
hitting
just
Axel with his own blueprint. So
it's like, okay, so I want to start, going out of state, and we have to figure out how to put together partnerships and structure this, and and how do you get comfortable going into a new market? So have someone on that did that and ask them those exact specific questions. And I think the people that like the podcast, I think, are kind of in that zone. They're trying to do the same stuff. But like they've got to figure it out. They know how to look at a deal. They know how to make money, but they just want to figure out how to do these, tweaks to their business. And that's kind of what I've tried to carve out is what I talk about.
Yep.
But it comes from a place of I want to learn this. These are questions I have, and if I'm having them, other people are probably having them.
Yep.
And then the same thing on the Instagram. It's like, what I'm learning as I go in my business. Is just what I put up on Instagram. Like if I deal with a problem and we resolve it or something like that, I'll just talk about it in a paragraph and throw it on Instagram. And I think people like it for the same reason, is just because it's like raw and filtered stuff that I'm personally dealing with. But as for I was really intentional early about growing the Instagram, and I think the end game for me wasn't like monetizing it and trying to sell something or something like that. It was just I want social credibility for when I go out there and try and raise money. People are going to go on.
Where I was leading to this, yeah.
Yeah, and that was the motivation for the podcast too. Is like he's got a podcast, he's got a bit of a following on Instagram.
So that brand is directly impacting, which I thought it was, and it sounds like you're saying that brand is impacting your passive investing because you've become an authority in that space.
Exactly.
So back to the technology conversation we were talking about earlier in the intro, you found a way to leverage those systems and technology, which is phenomenal. Great way to talk.
Yeah, and I for a month I just took a step back and I was like, well, like how do you grow an Instagram? And I just dove deep into how you grow an Instagram account, like as if I was a digital marketer, and I just completely was like, this nothing to do with real estate. How do people grow Instagram? So I tried to figure that out, and picked up some tips and tricks. I did a lot of engagement. I commented on a million posts every day, and I spent I invested a lot of time into that. Mm-hmm. So it was definitely a commitment. But now when somebody Googles my name or my business or the podcast or something like that, there's a lot of metrics, that support that I kind of know what I'm doing at some level, right? So it's like, I had a guy, and this is a crazy story. I'm trying not to take too much time telling it.
No, you're good. Share with the people.
I was at a bar in Boston probably a year ago, maybe a little bit over a year ago now, but left at 2 a.m. after a long night or whatever, and I got on one of those blue bikes, one of the city bikes that you rent to go, drive
2
around.
in the morning? Well,
Yeah.
I feel like this story's going to go in a lot of different directions.
I'm going to get away from this
button,
quickly. But as I get on the bike and I start riding with a friend of mine, my wallet falls out of my pocket. I didn't know, obviously. I get home and I'm like, my wallet's somewhere in South Boston. And I'm like resigned to the fact that I'm not finding that. I'm canceling all my cards the next morning. And I get some guy, he reaches out to me late, Sunday afternoon. And he's like, hey, man, I think I found your wallet, on the streets out by Stats in South Boston. I was like, dude, that's unbelievable. Thank you for reaching out. So I go meet up with him, and he's, giving it to me, and we're chit-chatting, and he says, hey, man, I came across your Instagram, and, I've been wanting to invest in real estate for a while. And next thing you know, 20 minutes later, we're deep in a conversation about just about, what I got going on and what he's got going on. Long story short, he's an MIT grad with oodles of money, young guy, middle manager at Amazon, and he's invested in a couple of our deals.
That's awesome.
That's awesome.
And that's
story.
literally, so the whole social media stuff, there's no direct ROI on my time at all. It's not like I'm selling something, but it's the more people that are there, the bigger the network is. So when I go into another market, I can say, who's got a good management company in Indianapolis, right? We're closing a deal in Indy on Friday, a couple days from now. And I got a bunch of recommendations just from guys that are out in Indy. And the people that are following real estate accounts on Instagram and that are seeing value in what I'm talking about are typically people that are pretty plugged in and know what they're doing.
Because it's getting the higher level with the access points.
So because what I'm talking about on Instagram doesn't really apply to somebody that wants to go buy a duplex. It's just not naturally what I'm talking about. I'm talking about the cost segregation stuff, how you scale the business, how you hire, how you outsource, how you find deals off market, how you raise capital. So it doesn't really speak to that audience too much. So I've just and this was somewhat intentional, but I kind of just backed into this where that just happens to be who I'm connected with. So, when I need something in another market, I can, blast it out there. And it's made running the business and growing it a lot easier in that respect.
You also instant credibility.
But the credibility thing is big. For the raising capital specific piece, that's a really big thing. And for brokers too, for example. I mean, not that we're doing a lot of deals with brokers involved, but if we do decide to try and look at really large deals where brokers are kind of the gatekeepers for that more, it helps to have some of that stuff ironed out, and it just shortcuts the process to getting traction there, I think.
Great answer. That's what I really wanted to dive into. That was phenomenal answer.
It's just the same thing as starting a meetup in your local market, but just on a little bit of a bigger scale.
Infinitely bigger.
Yeah, but it's it's the same. You have to. Everything in real estate is easier when people think that you know what you're doing. It's easier to partner. It's easier to raise money. It's I'd like to think I do, but I'm like...
Because I learned the more we do this and the more we grow, I realized I was foolish to even think I knew as much as I knew, because you learn... You constantly got to humble yourself in this business. What I find as you grow.
Absolutely.
And I feel like you do better once you realize that. You go and look how sure you were when you're 10 doors in versus now when you're 200 doors, you go,
Yeah, you think about what you were doing, the decisions you were making at 10 doors. You're like, what was I doing?
It doesn't make any sense. So
yeah, come on.
That's awesome.
Just going back to the Instagram and credibility through that, that's something that the Rental to Wealth crew, Kyle and Lauren, had said as well.
Yeah, they
got
dominate
investors
that.
just
crazy level.
throwing money at them.
Yeah.
But
Well, they
they're willing
went
to
and took
invest
it.
because they have that YouTube credibility, and therefore when they're looking for money, they can simply mention it, and then...
And it's all right there. It's all documented, right?
Yeah.
And I think, and we've talked about this, and selfishly, again, one of the questions I asked, one of the reasons we're kind of branching out even more, we're seeing it is, I think over the next 10 years, lenders are going to start looking at this. I already know private and hard money lenders. I mean, we were approached. I have a meeting Friday with a gentleman who read a newspaper article about us, our company, and is actually meeting because his son works at a hospital locally. He's up visiting, and he wants to invest and learn about a model because that was fascinating. And I'm going, oh my God, to your point, once you hit a certain point, you don't even realize it, whether good or bad, you're going to get Googled, you're going to get looked up, and as technology goes more that way, we really need to be intentional with our branding. And unless we're going to be completely passive behind the scenes, which that's not our model at all, it's definitely not your model, you got to be intentional with it. So I just think it's just, again, going back to we met, to hear a person. We're so big here on action and planning, and usually it's someone at the beginning, right, Jack? I met Axel a couple of years ago, and you said you were going to do this, so it's been just so cool to just see the growth and see someone follow through on it. You know what I mean? And I know 150 unit count has always been a big thing. Explain that a little bit, before we get into it, because I think it's huge for your goal-wise, why you kind of talked about that.
Yeah, so it's funny because I was kind of like, so it goes back to the Instagram. Why is someone going to follow me on Instagram? I got to have some kind of a compelling story here. And I think hey, trying to scale a portfolio, there's, I can talk about my experience doing that, right? So I was like, and when I graduated school or left UNH, I was like, I turned 23 a few months later, and I was like, hey, in 5 years, it'd be nice to own 150 units. That was kind of just the
arbitrary number.
Number. And then I did the math, at, $100 a door for just net cash flow, which honestly is lower than what it should be. But just, I was like, hey, that's $15,000 a month. That's that's not too bad at
awesome,
all.
Yeah.
So I was like, let's go figure out how to do that. So that's just kind of been a goal that there wasn't too much tied to it, but then I threw it up, and I think that it's become a nice benchmark for me, right? In terms of, and now I've probably set my sights a little bit too low since I know I'll pass it. We're gonna close on a couple deals this month that.
What's that mean?
We'll
You're already blowing past
so,
it. Maybe 1,500 doors in a couple of years.
I mean, so now it's like, can we get to 1,000 by 30, right? But and I think the whole separate conversation is door count. I think is just overrated. I think
don't get me going.
I don't like that. So it's funny. I'm gonna take that off my account pretty soon.
I think that was one of the colorful things I said to you.
Door count is because I have a small stake in a general partnership of a 104 unit deal. I'm not gonna pretend like those are my doors. Like that's
everyone else on Instagram does.
No, that's what I'm saying. So and it's funny because everyone else is doing it. So you're kind of like, you kind of have to play the game, right? Especially when you go out there and you're trying to talk to a lender and get better terms. Well, actually, I'm involved in 300 units, which I could say if I was going to go calculate it like that. Yep. But because that does kind of move the needle in your reputation. But for me, I was like, I've always wanted to just be authentic. Like I just wanted to be authentic in all of that stuff. And no, I don't own 200 doors. For me, it was like I want to own 150 like me. I want to personally own that.
Yep.
And
can I jump in right there to good points what Axel's saying? We talk about it, and we're going to do a deep dive in the Financial Freedom series. Check out past episodes. We've touched on Airbnb and leverage and a few other things. A big one is the freedom number. And the reason I brought that up is I know that was kind of your target, and it's adjusted, and I started the same way. You think, oh, you need this, Jack. You started the same way. And almost every person we meet who, to your point, is authentic, who's genuine, who's crushing it as an entrepreneur, forget real estate for a second, that freedom number is so different. We talk about it. That freedom number can be, we tell the story. We met with a very successful W-2 earner, a buddy of mine. He's making $500,000 a year. And he's essentially living paycheck to paycheck because his lifestyle inflation is through the roof. Yeah. And we're sitting there telling him, you can live comfortably under $10K a month. And he's like, you guys are out of your mind. You're mental. And I'm going, what are you paying for?
Yeah.
And that number goes back to door count and why, as much as we love social media, to play devil's advocate, you have to be careful with what I call a lot of the fake sharps, a lot of the fake authorities out there. If they're trying to sell you on what they're selling more than what they're doing, it goes back, for me, actions, not words. Show me you're living the life that I want. And again, coaching is a perfect example. We touched on it. At different points in your life, coaching is worth it. But be careful with it. And when I see somebody, it's just a personal agitator for me.
Oh, I hate it.
I've got 2,000 doors. Well, what they don't tell you is they get paid when they sell. They're not making any money. They're an hourly employee. Yeah. I have no knock on it, but you're presenting yourself in a way that people are going to you and they're thinking, well, actually, that guy, I told you we want to have him on someday, a guy we bought a deal off of in Dover. He thought I was blowing smoke. I go, you're what Tell Us Why is about. Because I had 17 units. Crazy. I go, no, you realized 35 years ago you wanted to play music in your cover band and you wanted to wake up when you wanted to wake up. So you leverage your W-2 to get to all these rentals. Now, he's self-managed. He ran them interestingly. But he's been financially free working for himself for 35 years. Yeah. That's your why. Yeah. You live your life better than the guy who might make $1 million a year in a bonus, but he's working 60 hours a week and he never sees his wife and kids.
Yeah.
Right? So just awesome. I just wanted to go on a rant on that.
So just going on that, so you guys don't give me shit, I Googled it. Just a Bill Gates quote that made me think of it. So I Googled it this time, so I didn't butcher it, and Jake would have to put it in the show notes after. But most people overestimate what they can do in a year and underestimate what they can do in 10, just going back to that bypassing the 150 unit count.
Super appropriate.
But
Super
appropriate. And I Googled it, so I didn't butcher it.
Yeah, people said big end goals too, and it's the whole 150 units thing. I think, for me, it's like I started the account. I think a lot of people are invested to see how I progress towards
now I got to get there.
So I got to do it now. But I think that in general, a door count goal is just, it should be a money per month goal is really what it should be.
Bingo.
Yeah. That's what it really should be. And I this quote, I've always really liked that because I think we really do think that you can do more in a year. But oftentimes when you're starting a business too, it's like you're spending that first couple of years just building the foundation correctly so that you can, it's literally it's any business, whether it's real estate or otherwise, it's you work really hard and it sucks really bad for a period of time. And then you get your head above water and you're like, this is unbelievable. But getting from that point to the 18 months, the 24 months to get to that point is really hard. So it's like you kind of have to set goals that are a couple years out. Yeah.
And that's unbelievable. We could keep going on this, and we don't want to hold you too long because I would literally keep you here for hours. So
I got nowhere to go. I got
Chrissy's going to kick us out.
Yeah.
She goes with it.
All right, so moving on to the Addicted to Problem Solving segment. This week we have a question from Bobby Kelly. And Bobby asks, what mistakes do you see new investors make when investing in multifamily properties?
That's a great question.
Yeah, that is a good question. I think, there's any number of mistakes. I think that the first one that I would suggest, I think that if because people send me deals, right? And they're like, hey, what do you think about this deal? I think that in general, people are a little bit too trusting of service providers, I guess, in the business. We'll say agents and brokers and, maybe management companies or contracts. Yeah, I can do that for
management companies. Interesting. This is why we get along so well.
Yeah. We partner in a management company. I think that oftentimes, listen, you have to be the GM of your football team, right? You have to understand each facet of the business.
You have to have the systems of accountability to hold them accountable at your rentals because no one's going to care like you will care.
Yeah, I think
look at that, Jack.
You probably didn't know I was going to go this direction with this, but I think for example, Belichick,
you guys
right?
team up on this?
Yeah, like Belichick on the Pats. He knows special teams better than anyone in the history of football, and that's not a glamorous part of the business. But I think if you're going to go out there and you're going to buy a deal, you should really know what it costs to renovate per unit, not what some guy on Instagram is saying that he did.
Yeah.
Like that doesn't relate to what you got going on. So I think that in general, you really need to get your numbers dialed in. That's kind of like the table stakes of playing the game, I think, is like you really need to know what your expense ratios are going to be. What's it going to cost to run this deal? Ask around, ask other investors for real data on that stuff. And maybe they can, and I think that's something where, maybe a management company can help with that, for example, right? Where what's the expense ratio for 4-unit deals in Manchester? And you'll probably get some pretty good data because they're in that business, but the agent's not going to give you the right numbers. They're
going to tell you it doesn't matter. It only goes up.
Yeah, they're going to, the rents that they're going to give you, the expenses that they're going to give you, none of that really makes any sense in terms of when you're actually in the business doing the deals. You're like, that's a little bit out there. But I think that you have to have your numbers really dialed, and you need to know your market really well, which kind of relates to that because you can't. The worst thing that you can do is get into a deal on your first deal. One, overpay, which in multifamily, your numbers are going to dictate you overpaying because velocity of money is really the only thing that matters at the end of the day in this business. Cash flow is great, but especially when you're getting started, you need that velocity to keep it going. So you have to get into the right deal. You have to understand the numbers to identify the right deal. So I think it starts with that probably would be my answer. But there's a million places I guess.
Oh, there is. Yeah. And the one thing I definitely have to piggyback off of that because it's very important is it really, I tell people all the time because we get this question all the time. And I say, it depends. If you want better answers, ask better questions. What do I mean by that? We're in a mastermind. There's a gentleman who invests in Ohio in a very rural area. There's a guy who invests in New Jersey who lives near Philadelphia. There's a girl who invests in Rhode Island. The guy in rural Ohio is, if we go and tell him what things cost up here, and you just paint with a broad brush, which goes back to the people on social media, and I hate asking that question because people say, well, how does Commonwealth Collective turn these units so quick? And what the correct answer would be, well, we're sociopaths and we're on top of it. We buy our own materials.
Yeah.
If you're not going to go put that time in and I tell you what I quote, and then you go and buy a deal and go, oh, well, Mike said it was going to cost me this.
Now they're underwater.
No. Or Axel on his Instagram said it cost this much. Really, it really does depend. And listen to what he said. Ask people in that market. Ask people who are going to do apples to apples. If you're buying a duplex, don't ask them what it costs to run a 100-unit apartment building that's a 2010 vintage. It doesn't correlate. So
yeah, and just to touch on that too, it depends on how you're going to approach the business. Like you said, you guys are buying your own materials. You're probably GCing it yourselves. You're probably really plugged into that process. Yep. I don't want to be plugged into that process. I'm spending more per unit to renovate units.
And so right there, we're already going to have. And there's no right or wrong answer. But if you don't differentiate, and you go to you for one answer, and that's why it's so important.
Exactly.
So, all right.
So moving on to the big three.
Great segment. We're going to hit them with it, but first, who is this brought to us by?
It's now time for the Big Three segment, brought to you by QS Private Lending. Are you looking to finance your next deal quickly and reliably with less hassle and paperwork? QS Private Lending is one of the oldest and largest hard money lenders to real estate investors in New Hampshire, Massachusetts, and Rhode Island. Our quick and simple short-term loans require no appraisals and have enabled hundreds of builders and investors to profitably acquire and renovate thousands of residential and commercial properties. To experience the QS difference for yourself, call or text Luke Conroy today at 315-323-0250. That's 315-323-0250. QS Private Lending.
All right, so now we're moving to the big three. These are the three questions we ask every guest every week, and I'll kick it off with the college question. So UNH is, in your opinion, is college
is the state
worth
you're
it?
from? Everyone's listening, Mr. New Hampshire. So.
I know, right? I'm like, how much time do we have? All right, so college, because I went to college because you're supposed to go to college.
Oh yeah.
Same.
It's your admission ticket to getting a job in the United States of America, so you have to go to college, right? If that's going to be your end game. So that's just part of the process. I think that if you have to be honest with yourself. Are you someone that's really, really sick in the head and actually can make it work without going to college? You can start a business and actually make it go? Then yeah, maybe you shouldn't go. For me, I'm not applying my degree. I mean, I knew I was never going to do that because I knew the end game was that I was going to go out there and run a business of my own at some point. But the social piece of it for me was a really big value add, right? I think all of my friends I met in college, right? You can't put a price on that. Those are people I want to be, outside of business, money, whatever. Those are people I'll be friends with for my whole life. Yep. I wouldn't have traded that for any amount of money back on college. So I think for that piece, I would advocate. But the one thing is, don't go to college and get a dumb degree. Like maybe I should say time out. Okay, I'll say time.
Oh, this is great.
Yeah, let me rein that one
we're
back.
We're unedited, but you just go with it.
I'm just
you're
saying.
Out there.
Yeah, I just think that just get a degree that has an ROI attached to it. Yeah. Unless you have a really, really tangible use for that degree, I think. So I think that's my answer.
Fund.
Yeah. Or a completely fallback plan. Yeah. Don't spend an absurd amount of money on a degree that has a not a great kind of yearly salary when you get out. I think that's kind of
get the degree, be a victim, and then blame everybody else for the
exactly.
I think that's on a prior episode. Tommy Freeze Pops of the Great Dane Nation podcast. He, for the same reason, he went to school. He recommends going to school just for networking.
Exactly.
Got him his
he
job.
wanted to be able, he
personally and
wanted to be able to meet
professionally.
these people.
Yeah.
Sports radio, podcasting, for all that.
And it's same thing. And again, you see these themes, which then leads to the next question, one of my favorite ones. You could go back. What would one thing you would tell your 18-year-old self?
It's not as hard as everyone makes it out to be. I mean, it takes a lot of work to do real estate, to run any business, but the knowledge gap and the people that are doing it aren't that much smarter, aren't that much more sophisticated than you. That's something that I've really been trying to focus on now. Is like
that fear mindset holds us back.
Yeah, I'm like, you don't know anything. You look at the guy that's got 10 units, and you're like, wow, like how did he do that? And it's like you think it's really, really challenging to do that, and it's hard to get going. But like once you're in it, it's you're like, oh my God, this is simple. I can't believe I thought there was so many hurdles involved here. And every time I level up or take another step in the business, I'm around people that are making more money, have a bigger portfolio, that they're just regular people. Yep. That's really functionally what it is. It's just regular people who have the guts to make a different decision. Yeah.
That's a great answer.
Mike went off on a rant last night on our mastermind meeting about people that are doing this, that are making more money than all of us combined on the mastermind, and just alluding to their ignorance in the
we were underwriting a deal, without boring you to the specifics, that it's a fixed income deal. I mean, what the market rents and the approach. And I let this other person kind of take over, and the level of minutia and the way they were trying to do it, and it was just incorrect. And I finally said, how do you have like literally $100 million portfolio? What are you doing? And it's just always that leveling up and that fear. So say with it, what's that? Take us home on that one, Jack.
So
hit him with the hard one.
What is the one thing you would want your 90-year-old self to say to you?
Oh, you left it all out there, right? Isn't that what we all want? I mean, I hopefully got a big bank account, and I'm sitting somewhere in Greece with a nice view and can do whatever I want to do. Greece, I'm sure that's probably going to be what you would like to be doing at that time too. But I don't know. I mean, it's just you look back and you're like, did I actually really fulfill my potential? That's my whole thing. Is like, what's the potential? How can we get there? And in reality, everyone's potential is way higher than what they think. And it goes back to the first answer.
Such a great answer. And you know what? It shows how it shows up in your business with how intentional you are, the way you answered that, because that's something a lot of people struggle with, and it goes to speak to your approach, how thoughtful, and how you answered it. So, Axel, thank you for being. Any parting words for the Tell Us Why community?
No, I appreciate you guys having me. This was a lot of fun. I mean, you guys are doing unbelievable things here too with just this whole setup and how you guys approach the show.
that.
I love the structure. If anybody wants to reach out, phone number 603-425-8454. I don't know if you guys do show notes or stuff like that.
No, we do. Where can people get a hold of you? That's actually the next question. You're saving us.
Oh,
He's a
okay.
host. He's a professional.
Let me
I like it.
dial
no,
it
we're going to
back.
say, where can people get a hold of you more? Making Chris's job easier, which you always appreciate. Where can people get a hold of you? Where can people learn more about you on social media? Check out the podcast, all those things. Where can they find that?
So Multifamily Wealth on Instagram, the Multifamily Wealth podcast. If you search it, I would imagine it would come up. Axel at brickleafproperties.com. So BRICKLEAF properties.com. Or my phone number, which I guess I've already mentioned.
He's already given it out. So people send him some
any of those
texts,
ways.
blast him. He loves questions about tenants at midnight. Trust me. Those are the ones to go with.
I thought it was 1:30.
Yeah, phone call questions too on top of it.
Those are great. So thank you, Jack. Where can people learn more about Tell Us Why on social media?
Find us on YouTube, Facebook, Instagram, LinkedIn, Twitter, and now on TikTok.
We are on TikTok.
We're on there. We're going to be
Nice.
posting some stuff
And-
soon. Mike's going to be dancing around. It's
You
going
guys
to
are
be
going to be
great.
lapping me on there.
You want a bald ginger on TikTok dancing? I don't know if we want
do
that,
now.
but we'll go with it. Okay. Or if something even better, come check us out in person. We record most Wednesdays at the Studio 21 Podcast Cafe. We have a live studio audience today. We'd love to have you here. Get some swag at the Tell Us Why store. And what is the quote of the week?
Start where you are, use what you have, do what you can. Arthur Ashe.
Oh, my God. 2 quotes today without stepping over. I love it.
He is amazing.
Awesome.
All right.
And that's it for today. Be sure to join us for next week's episode. And until next week,
Bet on yourself.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its